The middle market indicator, the MMI, is a pulse check for the 200,000 companies that comprise the United States middle market. Those are companies with revenues between $10 million and $1 billion a year, the middle third of GDP, the middle third of employment. Every quarter, we survey a representative sample of the middle market, representative in terms of size, geography, and industry, to see how they're doing and how they're feeling about the economy locally in the United States and abroad. Here are the highlights. As I said, middle market companies are reporting very strong year-on-year growth. In the third quarter of 2014, they said their revenues on average, or in the mean, were 7.5% higher than they were a year before. Now, this is the fourth quarter in a row in which they've reported a higher growth figure than the quarter before. So it was 7.5, in the quarter before it was 6.6%, the quarter before 6.5, the quarter before that 5.8. So a real acceleration in top-line growth in the middle market. We see the same picture in jobs, where the job creation in the middle market has gone from averaging in the mid 2.5% range to averaging in the mid 3.2, 3.5% range. And in this third quarter, middle market companies reported that in the 12 previous months, they had increased their payrolls by 3.5%, a very solid figure. The growth that we're seeing in the middle market is spread out pretty evenly across industries. And a welcome sign is that we're starting to see both job and revenue growth in the construction industry, which was perhaps the last to come out of the recession. But in this last quarter, construction revenue and construction job increases were both quite robust. We're also seeing, however, an interesting softness in one area of the middle market. We divide the middle market into three subsegments: companies between 10 million and 50 million in revenue, 50 and 100, and 100 and higher. But in that middle group, the 50 to $100 million range, we're seeing, first of all, that only 51% are reporting that they're actually doing better this year than they were at this time a year ago. And the top-line revenue growth numbers have dropped. It was 6.4% growth in the second quarter. It's 5.3% growth in the third quarter. So again, the smaller middle market companies showing extraordinary growth, the larger middle market companies showing very solid growth, and in the middle a little bit of a sag and a little bit of a concern. Now we also see strong continued confidence in both local and national economies in the middle market. This middle market indicator was out in the field in the first 2 weeks of September. It was before we saw some negative growth information from Europe and some negative growth information from Asia. We see strong confidence and basically persistent confidence at about the same level, 77, 75% in local economies. Very strong confidence, 65, 67% in the national economy, and the continued pattern that we've seen, less confidence in the global economy, in the 55, 57% range in the global economy. This is partly because middle market companies tend to be local champions. They know their local economies very well, they're very familiar, they're very confident in them, they know the national economy pretty well, they're less confident than they are in their local economy, but still fairly confident. The global economy is a little bit far out, and they're less sure about what they're seeing there. Let me touch again on the job situation. I mentioned earlier that job growth at 3.5% in the third quarter was very robust in the middle market. We're also seeing robust projections by middle market companies. We ask them about their expectation of hiring over the next 12 months, and their expectation is for continued employment growth at a 3.6% rate, just a little tick higher than the current rate. So what we're seeing in the middle market is an increase overall, a bit of a step change in employment and a projection of continued employment, all very consistent with the falling unemployment rate that we're seeing in the broader economy, and very consistent with the message that we've seen and sent for the 11 quarters in which we've been tracking middle market activity, which is that both in revenue growth and in job growth, these companies in the middle are leading the U.S. economy. So talent is one challenge, but of course it's not the only challenge that middle market companies face. We ask them what's most on your mind, what is most challenging, highly challenging, or somewhat challenging to them. And number one continues to be the cost of healthcare. It's been that as long as we've kept track of these data. What's interesting is that the margin between concern about the cost of healthcare and other issues has started to narrow, and in fact we're in nearly a triple dead heat. 85% of middle market companies say that they find healthcare challenging or highly challenging or challenging. 84% are concerned about the overall cost of doing business, and 83% say that they're concerned about their ability to maintain their margins. So these three things are coming together in a bucket of challenges that middle market companies are facing as they continue to grow and add to their payrolls. There's much more information from the Middle Market Indicator at our website. That's middlemarketcenter.org. We've got data by industry, data by geography, a lot more to learn about the performance of the middle market in the United States in the third quarter of 2014. I'm Tom Stewart. Thanks a lot.